Hey everyone, QuantumScape has been working diligently to bring an innovative battery technology product to market. Now, with that investment and all that upfront cost before the company starts generating revenue, understandably, investors are concerned that QuantumScape will run out of money before it gets its products into customers' hands. So in this video, I'm going to provide an update and answer if QuantumScape is in fact in danger of running out of money. And the information I'm going to use is straight from QuantumScape's CFO, Kevin Hetrich. And so we're going to get some insight from the company in their position in their cash management. So let's get right into it. So in their most recent quarter, the company's cash operating expenses, defined as operating expenses minus stock-based compensation and depreciation, were $64 million. And the company spent $25 million on capital expenditures. So for the full year in 2023, they're maintaining their guidance on capital expenditures of $100 million to $150 million and on operating expenses of $225 million to $275 million. Now, let me briefly explain the difference between capital expenses and operating expenses. It's just the way that companies separate costs because of the different way that they need to report this information to tax authorities, right? With capital expenses, usually the taxing authorities will not allow you to take all of that as a deduction in the first year. So for example, if you invest $100 million in a manufacturing facility, taxing authorities, well, at least here in the US, will not allow you to count that 100 million as an expense initially, unless you have some special incentive for that build out, right? Typically what happens is you invest 100 million in the building this year, and you depreciate that asset over 10 years or 30 years or whatever the rules dictate you have to depreciate that asset for. So what that means is, let's say for instance it's a 10-year depreciation schedule, you'll spend 100 million this year, and every year you'll take a $10 million deduction. So 10 million this year, 10 million next year, 10 million for 10 years to use that 100 million as an expense. So that's the main difference between capital expenses and operating expenses. Things like salaries, things like advertising expense, those you can typically expense and use as a deduction for your tax purpose in the near term, right? In the quarter in which they were experienced. So that's the difference between the capital expense and an operating expense, and why QuantumScape CFO here goes through pains in separating the two because of that difference, and also to let investors know how much of their investments are going for long-term things like that need to be depreciated over long periods of time, and how much money is going to short-term items like salary and rent and maybe other things that are short-term in nature. Okay, so that's a brief explainer of that. So overall spending about, let's say, 250 million in operating expenses and 125 million in capital expenditures. So at the midpoints of these forecasts, about 375 million in cash outlay for QuantumScape. And remember, the company has yet to get a product to market, so this is all just draining the company's cash that it has already raised from investors. So during the second quarter, their capex primarily went towards the facility spend for their consolidated QS0 pre-production line. So they're getting prepared for production. They haven't yet started production. They're getting prepared for production of their new innovative battery technology, which, if all things goes well, will have massive demand from customers because it will be more speedier to charge electric vehicles than what is currently available in the market today. So the company ended the second quarter with just over 900 million in liquidity. So that means if you take, so let's look at that 900 million in liquidity they have. And if you compare it to what we looked at earlier, so 250 plus 125, 375 million in spending for this year, they have about 2 years worth of cash on hand if they continue at the current spending level, right? And hopefully the company will have a product to market before those 2 years are up, right? And in that way they won't run out of money. But here the CFO says their cash runway is forecast to extend into the second half of 2025. The second half of 2025. So that's a lot of time the company has until it runs out of cash. But it might find opportunistic opportunities, I was going to say, to raise funds from capital markets, including under their at the market perspective supplement. So selling stock to the market to raise more capital. If they see an opportunity there, if their stock price explodes higher, they might take that opportunity to sell some stock and raise some cash. Otherwise, they don't need to, so they can be opportunistic. They don't need to go out there desperately looking to raise money. And so longer term, their capital requirements will be a function of their industrialization business model. So they can choose which business model they want to go into here. So they could have a mix of them owning all of the production. They could enter into a joint venture. They can have licensing relationships. So there's a lot of opportunities available to QuantumScape. The key is for them to develop this technology that manufacturers, which are going to be their customers, right? Think of companies like Ford and GM and Tesla and Rivian and other EV manufacturers. That's going to be their customers most likely. For them to want their product. And so then they can enter into a relationship and agreement with that manufacturer or several manufacturers for how they plan to proceed. Is it going to be where QuantumScape manufactures everything and then sells it to them? Is it going to be a joint venture where they kind of partner in the capital investment and share equity? Or is it going to be a licensing agreement where QuantumScape is just going to say, all right, you guys take the technology and just give us a royalty, a fee for each one that you produce, each battery that you produce, or each car that you sell that includes our battery technology. So they have flexibility there in terms of how they arrange those deals. But the key for them is that they have this runway, a couple of years, to kind of develop and prove their technology and come to the point where they have a commercial product available. And then at that point, it's going to be a lot easier for the company to raise cash if they need to, but they may not even need to because they can start making sales, they can start taking orders, and all of that will start bringing cash in. So I would say, to answer the question, is QuantumScape in danger of running out of money? It doesn't, not for this year, doesn't look like it, no. Maybe not even for 2024. I would say they only look like they're going to be in danger of running out of money in about a year, more than a year and a half. So into 2025. So investors, rest assured, QuantumScape looks like they've got some time on their side to develop and build out this product. But that's all I've got for this video. I've run out of time. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.